Hey guys, how's it going? It's Andy from Magoo Investing. Happy Tuesday. Today we're going to be doing episode 2 of where I discuss my favorite stocks from every stock sector. This was a way for me to kind of diversify the stocks that I talk about. I kind of gotten into a rut where I mainly only talked about technology stocks because that's where I felt most comfortable. But in today's video, we're going to be talking about the financial stocks or just the transaction stuff, anything that does with money. So we're going to be talking about some of the bank stocks and then some credit card companies and stuff like that. And I'm going to talk about my 3 favorite. I'm going to try to do kind of what I did with the energy stocks, where I'm going to talk about a variety of different businesses that come out of this one sector. So in the energy video, I talked about a oil company, I talked about a solar company, and I talked about a hydrogen fuel cell company. And in today's video, we're going to be doing something pretty similar. Similar to the energy stocks that we talked about on Saturday, the financial stocks are pretty diverse when it comes to what type of performance you've seen so far in 2020. When you think of the bank stocks, those are the ones that are going to be down significantly, between 20 and like 40% still. But you do have some good examples of stocks that have performed very well coming out of the sector. And so we're going to start with a bank stock that has not done super well this year, but has fantastic opportunities for a long-term investment. Before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research. Also, if you've been enjoying these videos, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. Let me know in the comments down below what sector you'd like me to talk about in the next video. So the first stock on today's list is going to be JP Chase, ticker symbol JPM. And yes, I know I've talked about JP Morgan a lot in the past like 10 videos, but I still stand by the fact, or my claim at least, that I think it's the best bank stock out there. And that's why I'm going to put it on today's list. Currently, JP Morgan is trading for $103 and it's down 26% year to date. So as I mentioned, this is a stock that is down significantly in 2020 and could be a fantastic opportunity for a long-term investment. So from the last time I talked about JP Morgan, there were some comments about interest rates and why people thought that maybe bank stocks are not a great idea during a time like this. And so I kind of wanted to talk about that main claim about interest rates being a danger to bank stocks because it is a valid concern. So currently the range for interest rates from the Fed is between 0 and 0.25. So it is very low. And while this looks kind of scary, and some people brought up the point that having low interest rates means that the banks are going to be less likely to make money going forward. But doing some research, I feel very comfortable with the bank stocks overall, and I'd love to share what I found from my research. So the reasoning behind lowering interest rates is the idea that with lower interest rates, it's less attractive to be saving onto money. And during a time with a pandemic where we were worried about the economy coming to a complete standstill, having your money sit in a bank at a 0% interest rate, it means that your money is going to be losing value over time because inflation is not able to be controlled by the Fed as easily as just lowering interest rates to 0. And so when you have your money is losing value, it's trying to promote spending overall. This also makes it so that major loans like mortgages or even a car loan is going to be cheaper because the interest rate is going to be significantly lower. So the whole idea behind lowering interest rates is trying to promote spending. And so during this time, even though interest rates are allegedly 0, they're never going to be exactly 0 when you go to a bank because they're going to be implementing fees to make sure that they can make a little bit of money. That's why the range is between 0 and 0.25. And so when we look at the historical range of interest rates from the Fed, you can see that you've had some areas of very low interest rates for a long time, and then you have some areas where interest rates were 20% back in around 1980 to try to combat the ridiculous inflation that the country was seeing, and that actually pushed the country into a massive recession. But I wanted to talk about some of the recent examples, mainly in the 21st century, of what we've seen with interest rates. So looking at the 21st century, after the last recession, interest rates were 0 up until 2016, where we finally saw the interest rate hike, and it started going up. And then we recently had to push it back to 0. But during that time, I wanted to look at bank performance because there was that claim that when interest rates are 0, bank stocks may not be a great idea. But when I look at the financial ETF, which is going to be ticker symbol XLF, you can see that from the last recession on, bank stocks went up. And so even though it may not look good on paper for bank stocks, the past performance from this ETF shows that they were in a decent spot, at least from a stock perspective. So let's go back to JPM. So I've talked about the interest rate idea. And one of the ways to protect yourself even further from that is by picking the best bank stock overall. And that's why number one reason why I like JP Morgan is because it is the largest bank stock when it comes to market cap. And it's even by a significant margin at this point. I've always talked on this channel that when you're buying into a stock or a sector that is pretty beaten down or you're not super comfortable with it, I always think that buying the largest company is a way to protect yourself from volatility and short-term price movement that could be detrimental to your position. And so picking a stock like JPM has the largest market cap, and I think that's a great idea. And number 2, let's talk about competitors. In the past year, when we compare JP Morgan to Bank of America and Wells Fargo, which are three of the largest bank stocks out there, you can see that in the past year, JP Morgan had higher highs, and it's done relatively similar to Bank of America in the past year, whereas Wells Fargo has not done so well. But when we push back the timeline a little bit to 5 years, you can see that JP Morgan has significantly outpaced the rest of the bank stocks, and then you push it back even further, back to 2000, and you can see that JP Morgan has been the best performing bank stock for the past 20 years. And the number 3 reason why I like JP Morgan comes from the performance during the last recession. And so in the past 5 years, the performance between the bank stocks looks pretty good when you're just comparing Bank of America and JP Morgan. But as I went back to the 20-year chart, you can see that Bank of America is actually down in the 21st century. And the main reason behind that is because they had massive problems during the past recession. And while past performance is not indicative of future performance, but JP Morgan was the only bank stock that was actually profitable during the last recession. And so that past performance makes me feel a lot more comfortable going into some potential bad times when it comes to the overall economy. And so when you look at that, the profitability, all of these factors, the largest stock, the best performing stock in the past 20 years, that's the main reason why JP Morgan Chase, ticker symbol JPM, is going to be my favorite bank stock overall. And it should be that way for a long time. Even when the pandemic started, JP Morgan had a profit of $4 billion, and 2.5 of that actually came from their investment banking, which I think is a fantastic way to protect themselves during some chop when it comes to the overall economy. And so JP Morgan seems to be in a great spot, and I'm very curious to see what you guys have to say about it in the comment section down below. All right, next up, we're going to be talking about one of my favorite stocks, and it's often called a recession-proof stock. And today we're going to be talking about Visa, ticker symbol V. Currently, Visa is trading for $207, and it's up 10% year to date. So I will just go out and say it. I was doing some research for this video, and I was trying to look at the differences between Visa and Mastercard. And honestly, you could pretty much interchange them on this list. They run very similar business models. The major differences between the two is that Visa is a larger company overall when it comes to revenue, but Mastercard is done better when it comes to overall growth. And so when I'm picking a stock for a long-term investment, I'm probably just going to be picking the larger one of the two, but I have no problems picking Mastercard over Visa. It's just one of those things where Visa is a company that I've used, and it's a stock I've traded in the past, and it's kind of the reason why I plan on investing in it in the future. Looking at the recent charts, Visa and Mastercard have pretty much been linked when it comes to their price movement. Going back to the last recession, Visa did slightly better for a bit, but it's still relatively close, and they're pretty much interchangeable at this point. But Visa is in a much better spot when it comes to some of the other companies like Discover and American Express. And when we show the recent performance, it might not look that different, but then when you go to the last recession, you can see some major problems when it comes to Discover and American Express, where Visa was relatively stable. And that comes from their business model, where Visa does not do any loans. They're just a middleman between the consumer and whatever store you're buying at. And so they don't have to worry about loan delinquency, which is something that is a huge problem going into a recession. And that was the main reason why bank stocks on paper don't really seem like a great idea for a long-term investment. And even during the pandemic, where they did see a 17% drop in their revenue in their first quarter of this year, it has come back significantly. They saw a 7% increase year over year in their payment volume in August and an 8% increase in July. So while they had a tough time during the beginning of the pandemic, they've bounced back relatively well and have seen almost double-digit growth when it comes to year over year, even though we're still in the middle of the pandemic. So overall, I don't really have a lot to say about Visa. It is considered a recession-proof stock, and it's a company that has done relatively well so far in 2020 and has an incredible track record. And so you could absolutely interchange Mastercard for Visa, but I definitely think Visa and Mastercard are better than something like American Express or Discover, which have a huge reliance on loans and just being a credit card company overall. So Visa is one of my favorite long-term investments, and it's something that I'll likely add to my position once I finally get a stable long-term job. And the final stock on this list is going to be the digital company PayPal, ticker symbol PYPL. Currently, PayPal is trading for $186, and it's up a whopping 72% in 2020. This has been one of those stocks that was poised to do incredibly well during the pandemic, and their earnings reports so far from this year have been so impressive. So compared to Visa and Mastercard that saw a 17 and 19% drop in their revenue during the beginning of the pandemic, PayPal came out and had a 22% increase in their transaction volume overall during the pandemic, mainly because of their focus on e-commerce. And when the pandemic hit and people were not able to go out to the stores, PayPal was perfectly positioned to take advantage of this. And this is why it has been one of my favorite stocks I've ever had. I currently do not own it anymore, but it's been one of my favorites, and hopefully if it has a pullback eventually, hopefully I can get back into it. It's really interesting to compare something like PayPal to a Mastercard. And while PayPal has been a relatively smaller company when it comes to market cap, it actually beats Mastercard when it comes to overall revenue, which is very impressive. And the growth that they've seen has been very impressive. Comparing it to something like Square, this is where you see some differences. And so I've always been a PayPal guy. I personally have used Venmo for the past 5 years and has been one of the most important apps that I've had on my phone during my college experience. And so people feel very strongly about Square and the Cash App, but I personally love PayPal. One of the main reasons behind that is kind of the difference between what I talked about with Visa and Mastercard. So PayPal is significantly larger when it comes to pretty much every metric when it comes to market cap and overall revenue. But when you've seen the revenue growth, Square definitely outpaces that, and that is why Square is up a whopping 150% in 2020. And so these companies are very similar to their business model, but personally, similar to why I pick Visa, I'm going to pick the larger of the companies and the company that I actually use in my day-to-day life. And so while PayPal is not up 150%, the 72% is still very impressive. Another thing that I really like about PayPal is that their revenue sources are split 50-50 between domestic and international. And then when you look at Square, it is at a 97% of their revenue coming from the United States. And so definitely they can expand further, but right now PayPal, because of their overall payment volume and their profit margin, because there's just an economy of scale, they have so many different payments coming in, they can make a lot more money. And so for the stability and the fact that Square is so overextended, PayPal is going to be my favorite stock when it comes to these digital transaction companies. Let me know what you feel between the differences of PayPal and Square in the comment section down below. Thanks for watching this video. This is going to be my breakdown of my 3 top stocks when it comes to the financials. I picked Visa because it was one of my favorite recession-proof stocks, JP Morgan Chase, which is my favorite bank, and then PayPal, ticker symbol PYPL, is a digital transaction company. So let me know what you thought of these companies and let me know what sector you'd like me to talk about in the next video. Thanks for watching, and I will see you on Wednesday or Thursday. I still have not decided yet.